The company that we are focusing on is Filatex India. Reported numbers. The revenues declined 2%, but the EBITDA grew 13% on a YOY basis, and profits also grew by 16%. To understand the outlook going forward, we have Madhusudan Bhageria, who is the chairman and MD at the company, joining us now. Mr. Bhageria, good afternoon. Thank you so much for joining in. Well, you are specializing in polyester filament yarns and related products for the textile and garment industries. There's so much happening. Today, we got that tariff cut that came in for Bangladesh. We had the UK FTA as well, and UK is a market for textile industry overall. Can you tell us how does it impact you? And first up, how much is your export as a percentage of total revenues?
Good afternoon. Our exports are not much because we have to compete against China, and right now we are not so competitive. But these FTAs will help us in a long way because our duty will be much lower compared to China. So I think FTA with UK, USA, and Europe, once they are all operational, that will give a big boost to the exports, and exports will increase multifold once they are all in place.
So is it in single digit right now, your exports? I think the last known number in your annual
they
is
are
around 2%.
very low. They are like 2-3%.
So when you say you have a lot of competition from China, I want to understand what really happens here. Is China exporting to other countries because it's a low-cost producer, or are you seeing higher dumping coming in from China? Can you explain the business fundamentals, considering that you're into polyester and not cotton?
Yeah, see, in the polyester, the main raw material for polyester is PTA. China is surplus in PTA. So first of all, their cost of raw material is much cheaper than us. And they are dumping everywhere because they are having more production than what they need in the country. So they are overproducing the product. So they are dumping everywhere in the world. So they are selling almost at marginal costing and below costing all over. And Indian local demand is also quite good. So we don't need to sell below our costing. So that's why we are not able to compete with them in the export business.
Okay, Mr. Bhageria, we get that completely. We also understand that recently across sectors, China now has a rebate policy in place. Does that also extend to the sector and the segments you are present in? Will that aid you? And the second part of the question is FY26, can you quantify the guidance that you've given the street?
FY26 is now about to end. I mean, what kind of guidance should I give? I had given guidance in the beginning that we will do more than 30% of what we did last year as far as bottom line and EBITDA is concerned. And I think we are on track. We might overshoot that.
Okay, take that point. So you do have a circular platform, the textile-to-textile recycling plant, 27,000 tons per annum, which is coming on stream. What is the timeline here? You have a tie-up with Decathlon as well there. Give us the kind of revenue addition that you'll see from here. What is the initial capacity utilization and how are you funding it?
So that's a new technology which we have developed in-house. We have also got it patented. And that plant capex is around 300 crores. It will be a mix of equity and debt. The plant is expected to be on stream by September of this year. And I think it will take some 3 to 6 months to scale it up on the full volumes.
And what is the asset turn on this particular?
As the top line is concerned, I think the top line we expect from that is something like 300 to 350 crores on the full production. But it will have a very good EBITDA levels. We should have a EBITDA of around 85-90 crores from that. And we are already in talks with some other brands also. Decathlon, we have already signed a MOU. We are in talks of a lot of other brands, and everybody is very excited about it. Because in the world, I don't think, other than one plant in China, there's anybody doing textile to textile on a bigger scale as of now. And we would be one of the first ones to start in September.
Okay, so textile to textile starts from September. Well, give us a sense as far as Vision 2028 is concerned. You've spoken about ambitious capex plans. With those capex plans, what kind of top line, EBITDA margins, and profitability can you garner come 2028?
See, FY 2028, we are doing some capex in the parent company also. That will also be effective from September 2026. We have taken up one project of distribution of steam, of excess steam, which we have Then we are doing sustainability power tie-ups with Torrent. So looking into all that, they all would be operational by September of 2026. And once our new plant of textile to textile is up and running, then we plan to multifold that. And that would take another 1.5 years. So maybe by end of FY28, we should be operational.
Understood that.
The other part,
other part, what we want to understand is how is, for you, how are raw material prices trending? Because that will give us a sense of how exactly we can see EBITDA margins pan out. So come FY27, top line you've given, some growth is expected, I'm sure. But what kind of EBITDA margin guidance can the street look forward to?
FY27, I think we should be close to double-digit EBITDA margins in percentage terms. Because of new plants of PTA coming in India, I think we will have a comfortable availability of PTA that should increase our margins. And also tie up with USA, I'm not sure, but USA is supplying MEG to India right now. And in case there is a zero duty on MEG, that could also benefit us. Also, the demand is growing multifold.
Mr. Bhageria, give us an ideal mix in terms of the domestic market versus the export market. Right now, you said it's quite minuscule, but in the next couple of years, especially with both the EU FTA as well as the trade deal that's come about with the USA, what can be the ideal mix as far as domestic versus exports is concerned?
See, for us, it's very difficult to give a number, but yes, we could reach 10% of export market. But if the Indian demand is very good, because India would be exporting more value-added products, we are on the down line. We are making yarns, which is used for making fabrics and then garments. If there is a huge demand for garments, we don't need to export yarn. We'd rather give it to Indian producers who can add value, and we export garments from India.
Okay, Mr. Bhageria, thank you so much for joining us and wish you all the best for the fourth quarter as well as FY27. We'll get you once again on the channel post Q4